All right, in this video, we're going to be talking about liquidity. All right, I'm going to be telling you everything you need to know in one video. All right, so buckle up. Now, before we get too deep into it, we need to first establish where that liquidity is residing. Okay, we need to identify these key areas. I have made videos on this specifically, and this isn't going to be the only thing I mentioned in this video, by the way. I'm going to be telling you how to use it. I'm going to be telling you how to use liquidity, how to trade liquidity. But that's the very first thing that we got to establish before we even go into that. We got to know where it's at, right? So here's the deal. Even from like the monthly chart, guys, the high, like even you don't got it. I don't really even look at the monthly chart much at all, but still, where, I know I have some longer term traders that are listening to me, but even like if you're a day trader, this can be useful because it's big major liquidity pools. So here's what you need to understand. Number one, there is buy side liquidity residing above old highs. Okay, what do I mean when I say old highs? Well, when I say old highs, I'm referring to swing high levels. What are swing high levels? Look right here. See how you get your high sign in the middle right here where my cursor is, and you have a lower high on the left, you have a lower high on the right. That makes that a swing high level. There is buy side liquidity resting above swing high levels, like right here. You see how price came up and it purged that buy side liquidity, and then what did it do after purging that higher time frame buy side liquidity right there? As you can see in that candle, what did it end up doing? It found resistance, right? Because it took that liquidity. Now, what many beginner traders will do is when they see something like this, because they read it in the textbooks, right? They'll see this old high right here, and they'll be like, okay, that's an area where price has failed to move higher in the past, right? This was the absolute high that price hit before it declined and saw lower prices. And then what a lot of beginners will try to do is they'll try to get their entry like as close as they can to that high to minimize their risk and then look for lower prices, right? If it's a short scenario. But what we're looking for here is, okay, I know that price is going to gravitate to take that liquidity. I know there's buy side residing there. I know price is going to want to take that. It's still resistance, but I'm not trying to get my entry as close as I can to this high. I want to see it take that high. I want to see it sweep that high. And then after it sweeps that high, it's going to gravitate and seek the next liquidity pool. Okay. So that's what we see taking place right here. And then you can see how it's having like this rejection off this buy side right here. And this closes weak right here with this signature. What do you think it's going to want to seek next? Likely. I didn't say 100%, but likely. What's it going to seek next? So now that it's taken that liquidity and it's showing respect, that's the key thing, respect for that level. It's a little bit different if it would have ramped above this, closed above it with aggression, with strength. But I want you to notice how it came up. And it's actually confirming that that's resistance right now. It's confirming its resistance because look at that big wiki price action. The wicks do the damage and the bodies will tell you the true story. The wicks do the damage and the bodies tell you the true story. Okay. So what that means is like we had this push up right here. And what we see happening is a manipulation move to take out these highs. It came up. It was looking very bullish, looking very strong. That's the intention because it wants to take that liquidity. But it also does something else in the process of doing this. Yeah, it takes out the buy side that's residing there. It takes out the short side that are residing there. But at the same time that this price is pushing up, I want you to imagine, because at one point, keep in mind that this was all green candle in here. At one point, this was all green candle ripping up, taking out these highs. What do you think that's also going to do in the process? It's going to create sell side beneath this low right here. And then look what that's going to be, a swing low level right there. And we already have these signatures. We can see prices respecting that high right there. It's respecting it and it's serving as resistance. Then you look down below. Let's say we come into a brand new month and it closes like right here, boom. What do you think price is going to want to seek next? It's likely going to want to attack this low because it showed respect for this buy side. It already took it. If it's already taking that buy side, it's respecting that buy side. Where else is it going to go? It's going to look for opposing sell side now because it already has sufficient buy side. Not only do we got that, but we have internal range liquidity. Price takes external, seek internal. Look, this is liquidity as well. Not just old highs and old lows, okay? That's what we call external range liquidity, okay? Old highs, old lows, again, swing highs, swing lows, external range liquidity. This is what we call internal range liquidity, imbalances, okay? And So in the fair value gaps, so look right here, 1, 2, 3. 3 candles make a fair value gap. And I have videos on fair value gaps. Okay, just search my channel and I'll even leave a link to my video on fair value gaps in the video description. So after you watch this, you can watch that to see what that is a little bit deeper. But here's the deal, guys. We have this imbalance in here serving as a draw because this push up was too quick. It was too fast, too extreme. So it did not have a chance to efficiently deliver this price action right here, leaving an inefficiency. So you got to listen to price. We could see it already came up and it took out this high right here. Okay. That buy side's done with respecting it. Now it's simply going to look down and it's going to do what? Because you got to listen to price. Okay. You got to respond to price because it'll talk to you. It'll give you signals. It'll tell you what it wants to do. It's telling me, okay, it's respecting this resistance clearly. Look how weak it is. That's not a bullish signature, is it? No, not at all. That is not a bullish signature. When you see something like that, when you see such a hard rejection like that, that tells me that its sole intention was to manipulate higher to take out this buy side. And now it's going to want to come down and take that here next because it's telling me that. It's telling me it wants to respect that. That's where it's going to want to draw to next. Okay. Now, another key liquidity pool. We talked about owed highs, owed lows are key liquidity pools. I'm on a monthly chart, guys, but it's the same deal on the daily. It's the same deal on the 4 hour. It's the same deal on the 5 minute. Owed highs and owed lows. Every time frame, buy side and sell side is reciting up above and beneath those levels. All right. So we have established that. Now, we've also established that these imbalances, that's internal range liquidity. Okay. Because it's their inefficiencies in price. It was not efficiently delivered. It was too fast, too extreme, too explosive. It didn't have a chance to. Those are key liquidity pools that you want to be aware of as well. Okay. Now, another one, since we're on a monthly chart here, previous month's highs and previous month's lows are key liquidity pools too. So you can see like right here, for example, you see how we got previous month's highs right there? That was February's highs. Again, we're on March 2024. But this is February. That's the absolute high of February right there. It's already taken that. So not only did it take out that higher time frame buy side right there, but it took out previous month's highs as well. And look what you got right here. That is previous month's lows right there. Okay. And that's what we got taking place. So you can see that that's going to be that magnet for price. Okay. Like you can see that's the respect it had for these levels right here. You can see it already took out previous month's highs. It took out this high right here. Look at all that buy side it took. And then look down below, we got this imbalance. And then we got this, we got previous month lows. That's sell side right there. Previous month lows, or beneath previous month lows. That's a big sell side liquidity pool right there. So think of it like this. We've already taken out all this buy side right here. We've already taken out previous month's highs, monthly buy side. And now we have this inefficiency down below that hasn't been tapped into in the slightest. We have previous month's lows that hasn't been tapped into either. Price is going to want to seek that next key liquidity pool. It's going to want to seek it. There it is. Why would it move higher? It's already taken this out. Why would it move higher? It's already taken out this sheer amount of buy side. It's going to want to seek sell side. It's going to want to seek that inefficiency. But let's go down to the weekly chart now. So what's the deal on the weekly chart here? Well, on the weekly chart, you can see another key liquidity pool you need to be aware of. We've already talked about owed highs and owed lows. You can see right here, owed lows, there's sell side residing there. Owed highs, there's a buy side residing there. So it took out this buy side on the push up. But you also need to understand that beneath previous week's lows, there is sell side residing. So you see right there where my cursor is, that's previous week's lows. It took out that sell side. There's sell side residing there. And then above previous week's highs, look right here, there's sell side residing there. And those are key liquidity pools that you need to be aware of as well. Okay. Now, don't expect price to have a complete reversal off every single liquidity pool. Like, for example, you could see price, it came down and took out this liquidity pool, and you may be thinking, oh, we got this liquidity right here. We got all this stuff. So why is price not respecting that? I thought it gyrates on liquidity. It took out this liquidity, but it's not respecting it. Like, what happened there? You got to consider other things as well. Okay, it's not as, clean cut, easy as that, right? You got to consider all the other stuff. Like we've taken out previous month's highs. We've taken out the monthly buy side. It has more buy side than it has sell side, and price is going to move in the direction of least resistance. So you got to consider that as well. You got to consider market structure, premium and discount, all that good stuff. Okay, I'm not going to overwhelm you with it in this video. We're just going to talk about liquidity, but it does all matter. And I do have videos on market structure and premium and discount, etc. But previous week's highs, previous week's lows, those are key liquidity pools you need to be aware of as well. All right. And then we have previous day's highs and lows, key liquidity pools. Okay. Previous day's highs, previous day's lows, major liquidity pools. Again, beneath all these old lows, old low right here, old low right here, old low right here, there's sell side residing beneath all these old low levels, okay? And you can see, look, buy side right here, buy side right here. There's buy side liquidity above all these swing highs. Above each of these swing highs is buy side that's residing, okay? And you can see we got this internal range liquidity right here. All right, now don't overwhelm yourself. You know, like you see all these things on this chart, and I understand. You're looking like, oh my fucking God, look at all this stuff. Like, there's so many liquidity pools. Like, which one do I go with? I'm going to break it down for you. All right. But right now, that's all I'm doing is I'm just establishing where the liquidity is. And then I'm going to tell you here in a moment how to put it all together and how to use it. Okay. But right now, we're just kind of establishing where it is, because you got to know where it is before you can use it. Okay. And it's the same deal. 4-hour chart, old highs, old lows. There's liquidity residing above and below. Okay. And all right, so what we had happen here. Oh, and also one last time, the intraday liquidity pools you need to be aware of. All right, so I want you to look at my cursor. See this right here? That is where Asian session begins. So 7 o'clock. See that? 7 o'clock is where Asian session begins. All right, and Asian session goes until midnight. Okay. And then we have London session, which is 3 o'clock a.m. Oh, and also, because, you know, you might be thinking, okay, but then what's in between, you know, what's in between midnight to 3 then? That's Tokyo session. I don't really put much emphasis on Tokyo session, but that's when Tokyo session is operating at that time. But then we have 3 o'clock, which is London. And Tokyo goes until 5 o'clock. And then London to 3, and then 3 to 11 is London. So London goes from 3 a.m. Eastern time. Again, this is on Eastern time. And then it goes to 11 o'clock, okay? New York goes from 8 o'clock, and then we go to 5 o'clock. All right, so what's the importance of knowing this? Because underneath and above these sessions is buy side and sell side, okay? Above Asian session highs is buy side liquidity that's residing. So for example, you can see right here is the beginning of Asian session on this particular day. And then this is the absolute high of Asian session right here. See this? Because guess what? Here is midnight. We're coming to midnight right here. And this is the absolute high of that session. It began right here. And that's the absolute high of that session right there. That's Asian session highs. And also in this scenario, it is previous day's highs as well, which we just said. Previous day's highs is a significant liquidity pool. And yes, you go off midnight, okay? You go off midnight. A brand new day starts midnight. Use New York time just to simplify. And that's when, and you're going to look, you can see right here, that's Asian session highs. It's also previous day's highs. That's a key liquidity pool. We understand above that high is buy side that's residing, okay? There's buy side liquidity. And beneath the low of Asian session is sell side that's residing, okay? So we have 7 o'clock right here, 19, look, right here. That's the beginning of Asian session. And then look, this is the absolute low that was traded in Asian session, okay? That's not low of day, that's just Asian session lows, okay? Low of day is all the way, it's all the way down here is low of day, okay? Or it's previous day's lows, because remember, we're coming to a brand new day. We're coming to, at the time that we're going over this, I'm going over the Thursday. So that is previous day's lows all the way down there. But this is Asian session lows, because that's the low that was made after 7 o'clock, okay? And then we come into midnight here, which is a brand new day. Asian session closes, and you have that range to work with. You have this liquidity to work with, okay? Asian session, like these are very important liquidity pools you need to be aware of. Asian session highs, Asian session lows are very important liquidity pools. Why? Well, for example, I really don't even like to take shorts if I don't have Asian session highs taken. I really don't even like to take longs if I don't have Asian session lows taken. And the reason for that is because I need to see that liquidity taken so it's not able to serve as a draw later. Because as I was saying earlier, everything price does revolves around seeking liquidity, okay? And if it takes that liquidity, it doesn't have that to seek. Now, is that always the case? No, of course not. It depends on market structure. It depends on what is its premium or discount. It can still sell off or rip up even after taking these levels. I'm not saying it can't do that, but I'm saying it makes it higher probability when you have that aligned, when you have a short setup with everything else that I want. This isn't the only thing, of course. I need other things. But when I have Asian session highs taken coming into London, well, it makes it higher probability because it cannot seek that liquidity now because it's taken it. How is it going to seek it? How is it going to draw to it if it's already taken that liquidity? It's the same deal for Asian session lows for a buy setup. Okay. So we need to be very aware of these liquidity pools coming into the day. So on Thursday here on GBP USD, what I did with my mentees, as I always do with my mentees, is we do like top-down analysis. Okay. I do a top-down, I start from the daily and then I go and just work my way down, right? So I saw this daily chart on coming into Thursday, and it actually had a bullish signature here. It had a bullish signature, being that it had this swing low put in. And so we had our lowest low in the middle, higher low on the left, higher low on the right. That is a bullish signature, and it did that off that support right there. But kind of keep in mind what we were talking about earlier. It did take out significant buy setup here, so no surprise. And I want you to notice when it did that too. Notice like how when it took out this buy side, it was in early March. So the thing about it is, what is that? You have power of 3 in play. The thing about power of 3 is it happens on these higher time frames too. Like it happens on the monthly range too. Just like we talk about power of 3 on the daily range, it happens on the monthly range. Like this was your Judas swing right here, likely. This is your Judas swing right here. Because look, it's the very beginning of the month. And you got to think about the liquidity that it's taken at the very beginning of the month. It's taken out previous month's highs. It's taken out monthly buy side right there. The sheer amount of liquidity, and it's having that first push up higher right there. It's having that at the very beginning of the month, and it's taking out this huge amount of buy side. That's your manipulation swing. That's the Judas swing. Okay. So then you see this probably going to be what the high of the month. All right. The high of March. So that's what happens. But then it pulls back here and it comes down into a daily discount. It tests this daily or this old high support, and it puts in the swing low level right here, which is a bullish signature. But here's the deal. Whenever you have that swing low level, previous day's highs, it's going to be a very powerful draw. When you have a swing low level like that, the high of that third candle, that price swing, again, previous day's highs, is going to be a very powerful draw. Because now think of it, just to simplify it here, price is essentially, it has that upwards momentum now. It has that upwards momentum, and it is now, it's in an upswing. It has that swing low put in, and it's going to want to continue, it's going to want to seek previous day's highs at that point. I see that, and I note that for my mentees. First things first, okay, I say, we got the swing low, very strong expansion on Wednesday. So I understand that it's going to tag previous day's highs. It's going to tag that liquidity. Remember, previous day's highs, previous day's lows is a key liquidity pool. And because I have this swing low put in, I have this big bullish expansion. Remember, each candle tells a story. The wicks do the damage, but the body tells a story. And I see a very strong close like this. The body is telling me, okay, it wants to move higher. And then where's the next key liquidity pool after it closes? After it closes, we have previous day's highs intact. Right away, I know it's likely going to seek that. It's going to seek that liquidity right there. Okay. So, but keep in mind, here's the thing you got to keep in mind. We're in a premium. It has that push up. You remember we were like that big daily expansion that you see right there. That big daily candle that you see right there. You go to the 4-hour chart though. The thing is, it's in a premium marketplace, meaning it's already taken out significant buy side. Look, it took out highs, these highs right here, these highs right here, these highs right here. It rebalanced that price action. This is all liquidity that it's taken. Keep that in mind. This is all liquidity that it's taken. So it's already in a premium. But again, we have that third candle draw, which is a very powerful draw, being that swing low, the high of the third candle, the swing low. We understand it's going to want to take out that high there. Okay. Coming into a brand new day, because typically what you'll see is whenever you have that swing low like that put in, it's like a really strong expansion like that. Price typically is not going to leave that third candle untapped for very long at all. What you'll see the most of the time is it'll be very quick and it'll take it out immediately. But here's the deal. Remember, we're already in a premium here. We've already taken out this buy side, okay? And we're coming into a brand new day here. Let's go to a lower time frame. Remember, we've already noted our liquidity pools. We have this right here. That's that third candle draw that I was just talking about on the daily chart. Remember, we had that big expansion on the daily swing low. Right away, as I was talking with my mentees on this particular day, we were anticipating that, okay, it's going to come up and take this high probably. It's going to want to run that because it's a very strong draw. It's a third candle draw. It's a very strong trend right now, okay? I understand it's in a premium. I understand it's taking out significant 4-hour buy side. I understand it's probably going to sell off here soon, but right now, we have that liquidity that's up next. It's taken out that, but now it's closed. And we have this. And when price is in that upswing like that, it's so objective. is to run out that high, previous day's highs. It's like such a strong magnet, okay? So I'll see this, right? And I understand, okay, this is previous day's highs, it's Asian session highs. Prices want to gravitate. It's want to gravitate to that liquidity right there, okay? That's a draw. That's a draw. I can already establish that that's a draw just based on the higher time frame chart. Coming into a brand new day here, I still have that intact. Okay, I understand that's going to be a draw. We're coming to a brand new day, okay? Again, remember Tokyo. And then what happens here? We come down and we take out sell side. See that? So look, what's that? That's Asian session lows that's taken right there. You see that? What is that? That's a key liquidity pull. Now keep in mind, this high is still intact right here. That high is still there. Previous day's highs was never taken. It's still there though, isn't it? Yep, it is. It's a draw. It's a draw on liquidity. And look, we're coming down immediately, and we already took care. We already took care of Asian session lows. Look, right there. That liquidity's done with. So the absolute low of Asian session is done with. That liquidity can no longer, that specific liquidity pool can no longer serve as a draw because it's taken it. Right there, it took those stops. It took that sell side. And remember, everything price does revolves around liquidity. It's always seeking that next key liquidity pool. And we've taken out Asian session lows, but don't forget the higher time frame perspective because it all makes one big picture. The higher time frame daily chart had that swing low put in. We understand that third candle is going to serve as a very powerful draw up there, and it's still there. Asian session highs is still intact. It's also previous day's highs still intact. And we have that there into a brand new day. I understand it's going to take that here very, very soon because I understand when I have that signature, price is typically not going to want to leave that level intact for very long. And what do we do first things first? We came down and we took out Asian session lows. That liquidity's done with. So now that Asian session lows can no longer serve as a draw, it's going to want, you're going to simply look up. Look, we get a shift that's happening right here. It's going to look up and it's going to want to do what next? It seeks the opposing buy side. It's like ping pong back and forth, like a seesaw, right? It takes this up, or it goes down, and then it seeks up the next. After it takes this liquidity, it's going to seek the next liquidity, just like that. It takes Asian session lows, it has that push up, and it seeks the opposing buy side now. Now, somebody may be like, okay, but how did you know though? Because this is what we were anticipating. We were looking for that push up, but how do you know it's not going to sell off though? Because like it had such a big push up and it's in a premium, as you said. It took out significant buy side. So Mike, I don't understand like why you would want to see it take out that if it's already so overbought, right? Like you have this big push up, you have this internal range liquidity down below, you have all these things. So why would you want it to push up? Again, you have that swing low, that specific signature. When you have something like, when you have a strong close, that's the key thing. When you have a strong close like that, and it's in an upswing like that, it has that swing low, and it's in that upswing like that. And you come into a brand new day, and you come into a brand new day off that really strong expansion, and you have previous day's highs that's intact. That's going to be price's main objective. It's going to take that high. That's I can't stress this enough how strong of a magnet that is going to be for price. Previous day's highs, when you have that swing low put in like that, when you have that strong expansion like that, it's in that upswing like that. That's its objective, is to continuously run out previous day's highs. So when I have something like this and then it sells off and it takes out this liquidity, guys, how often is price just a straight line lower and it just has no gyration from liquidity? And how often does it just sell off? No type of movement, like it's just all the way down to a discount. That simple, that easy. No, it gyrates from liquidity to liquidity. And you have a strong close like that, and price comes down, and it's now taking out this liquidity. Okay, that's support. Okay, we don't use it in the conventional manner of like, okay, trying to get our entry as close as we can to this low to minimize risk. No, I want to see it take that out, because now just taking out that liquidity, it can now seek this opposing buy side here. Price is always seeking liquidity. It has sufficient sell side. Now it wants to seek buy side. That simple. It's that fucking simple. Okay, it takes out that liquidity. We look forward to seek that. So we have this push up. Now, guess what? Coming to 3 o'clock, because this is when I'll start hunting. I'll start hunting after 3. We have that push up after 3, so we're coming to a London session, and it comes up into London, and it takes this high right here. Okay, that's what we see. So guess what? Now, Asian session highs Now, previous day's highs, that liquidity is taken now. Okay. So you might be thinking, okay, but we've also taken out Asian session lows though. So you kind of cleaned out both sides. So how would you approach a scenario like that? Like if you've taken out Asian session lows like that, and that liquidity is done with now, but now you've taken out Asian session highs and you take it out previous day's highs. How do you know which way to go? Because like this you just said, Mike, that this liquidity is no longer serving as a drawdown here. Asian session lows is done with, as you said. So if that's no longer serving as a draw though, and we took out this as well, like, but then where does it go next though, since it's taken out this and it's no longer there? Well, that's where you have to get that higher time frame perspective. I want you to zoom back out here. What is this in right now? And then this is where we got to implement time as well. Okay, you got to implement, because it all comes together. I don't just use, I'm mainly focused on liquidity in this lesson, but I don't just use liquidity. I utilize market structure. I understand whether it's in a premium or a discount marketplace. Like I have that full picture of price, and it all comes together to give a full picture. It comes together to paint that full picture for you. But what you got to consider here is where are you in this range? You're in a premium. Because keep in mind, you had this big push up, and as I said, it took out this significant buy side already. It took out this, rebounds this price action up here. But if you're to take your Fibonacci from that low to that high, look what you are in the, and then look, this, yeah, you got this big inbound right here. Again, that's liquidity too. Like this is internal range liquidity right here that you had on that push up, that pushed us up into a premium. It created an internal range liquidity. And again, take external, price takes external, it's going to then want to seek internal, takes external range liquidity, seeks internal range liquidity. So we took out that external range liquidity on this big push up, and in the process of doing that, it created internal range liquidity down below that it's going to want to seek because it has sufficient buy side now. But the thing is, you also consider is we have it in a premium, and this is where it would enter a discount marketplace. This is where it would be considered cheap within that price range. So what I'm actually going to do, just so we're aware of it, I'm going to put a extended line right here. That's where we enter a discount, just so we're aware of it, because I want to remove the Fibonacci. That's where price comes down to a discount within this range, okay? Now, I want you to remember everything that I've told you thus far. And if you're still lost right now and just kind of a lot of information, stick with me, because it's going to start to, click as I go through it. It's going to start to come together as I go through it. And if it doesn't, well, then just watch it again and it'll start to click for you, right? But here's the deal, guys. We've taken out this buy side, and we've already talked about how we had that swing low put in on the daily chart, right? So we've already concluded that, okay, and I've taught you that's a very bullish signature. And I've talked about this in several videos. When you have like a fresh swing low like that, when you have your lowest low in the middle, higher low on the left, higher low on the right, and this candle like this closes and it's like a really strong close, a really strong expansion on that third candle, that high is going to be a very strong magnet for price. Again, that's why I figured it was going to take that out. Is that always the case? No, sometimes it'll sell off before doing it. But the vast majority of the time in a scenario like this, and you have a strong expansion like that, that third candle high, aka the high of this candle, previous day's high, is coming to a brand new day. That's going to be a very strong draw. It's going to be a magnet for price. Price is it's usually not going to it's going to spend very little time beneath that level right there. Okay. So I have this happening. And so, yeah, I understand it's in a premium and it's having this push up and it's coming to a brand new day. But I understand, okay, it's probably not just going to sell off just a straight line lower. No, it's going to take that liquidity first before it does that, because it's a strong draw. I understand that specific signature, that it's a very strong draw, okay? Yes, it's previous day's highs. It's also Asian session highs, okay? But then after we take that liquidity, so remember, we took out Asian session lows first. That's what gave it the fuel. Think of it like that. Once we took out Asian session lows, that's what gave it the fuel it needed to have the push up to take out this liquidity. That gave it the necessary fuel it needed to make the trip up into this, okay? But then after it does that, again, we've taken out Asian session lows at this point, so that liquidity is done with, okay? And now, though we've taken out Asian session highs, we've taken out previous day's highs, that liquidity is done with. But when we're doing this, what are we still in? We're still in a premium marketplace. We're still in a premium when we're doing this. We're still in an expensive marketplace when we're doing this. I just told you, like, this is where we come down to a cheap marketplace. This is where our discount is. And we have this internal range liquidity right here that's going to serve as a draw. Now, our time frame perspective, then this is where we kind of got to implement time as well. Because when you look at a daily candle, When you look at a daily candle, guys, what happens here? Like follow my cursor. Look at this candle right here. I was saying it earlier, and I'm sure some of you caught it when I said, okay, and ICT has said this as well. The wicks do the damage and the bodies tell the story, right? The wicks do the damage and the bodies tell the story. So on your typical bullish expansion day, when is that wick going to be put in? When is that low going to be put in on a bullish expansion day? When is that put in? It's put in London session. Okay, it is put in London session, and then you see that expansion throughout the rest of the day into New York. That's a typical bullish expansion day. Again, the wicks do the damage because that's when the manipulation happens, and that manipulation happens into London session. The high or the low in a bullish expansion day put in London, the high in a bearish expansion day put in London. All right, so you can see right here, then it expands higher. Look right here, wicks do the damage, expands higher. Wicks do the damage, expands higher. The bodies tell the true story. So see how it's in this upswing, and it's so objective in this upswing that you see right here. If they continuously run out previous day's highs, run out previous day's highs right here, boom, run out previous day's highs right here, boom, run out previous day's highs right here. It's continuously running out previous day's highs in that upswing. And again, these little wicks that you see on these candles, on these bullish candles, that's manipulation that you see. That happens early on in the day, okay? And it's continuously doing this, okay? And then what is it? And then a bearish expansion day is just the opposite. It has the manipulation higher and then it expands lower, closes. The body tells the true story. So you have like a really strong expansion lower like this, that's bearish. Now it's in a downswing. What does it do? It opens up right here. Look at my cursor. Has a push up higher, manipulation right there, expands lower, closes, boom. Okay. And yeah, you'll have like inside days as well. Again, it's not like a perfect science. You know, it's not soup. You know, you're not going to get what you want to see every single day, but that's the gist of it. And then look right here. You open up right here. You get a move higher. Again, that's manipulation. That wick that you see, the wicks do the damage. The bodies tell the real story. It wicks up. That's manipulation. It expands lower. It tells the true story. Now, you might be thinking, okay, where are you going with this, Mike? Because you just pivoted from that to this because it connects. And this is I'm going to bring this over to this example. Okay. So what I was about to say was, okay, we understand that it's doing this in London. Remember, I want you to really remember what I just told you a second ago when I was going over those daily candles, and then we're going to relay it over to this. We understand that this is pushing up in London. I just told you, what did I just tell you about London? That's a key time where manipulation happens, right? That's a key time. In a typical bearish expansion day, the high is going to be put in London session. And that high is going to be put in after it takes what? A key liquidity pull. Because everything price does revolves around liquidity. But when that high is going to be put in, it needs to have sufficient buy side in a bearish expansion day, and it's just reversed for a bullish expansion day. It needs sufficient sell side in a bullish expansion day. But in a bearish expansion day, your typical bearish expansion day, that high is going to be put in a London session, and it's going to need sufficient buy side liquidity before it is able to put in that high. So we see price push up right here. And it takes Asian session highs. It takes previous day's highs in London. In London session, it's doing this, a key time where we understand manipulation is going to occur. A key time where we understand, okay, the high is put in a typical bearish expansion day. You can kind of think ahead here and say, okay, this is likely going to be the high that's put in today. This is going to be the high. Because where's it going to go? We just said it's in a premium. Don't forget. We just were talking about a second ago how this thing had this big expansion higher. Remember, it took out this buy side, took out this buy side, took out this buy side. It rebounds this price action. It's already an extremely deep premium marketplace, an expensive marketplace. And now you have this thing, this is where we implement time to the equation. We have this thing pushing up here and taking out previous day's highs, taking out Asian session highs in London session. Where else is it going to go? It's already expensive. It's already in an expensive marketplace, and it's already taking significant buy side. Where the fuck is it going to go? It's already overpriced. It's going to want to seek a discount. Okay? It's going to want to seek that internal range liquidity. You're doing all of this. You're doing all of this in London session. Like, we understand typical bearish expansion day. The high is put in London, and it's doing all this in a premium marketplace, taking out previous day's highs, taking out agent session highs. It's doing all of this. It's taking all of this liquidity in London. Everything price does revolves around liquidity. So if it has sufficient buy side liquidity right here, if it is already in a premium marketplace right there, where else is it going to go? It's going to want to seek the internal range liquidity in a discount. That's why, because then it brings me back to what I was saying earlier in regards to, okay, where's it going to go now though, since agent session lows is done with though? Like, it's already taken out agent session lows though. It's taken out this, so which one does it go with? Like, how do you know it's not just going to take agent session lows and just rip up now? Again, I just told you a second ago. I just told you it's in a premium. It's already taken out. You got to understand like how the daily range expands. The wicks do the damage. The body tells us the true story. And we have this happening. You're in a typical bearish expansion day. The highs that we put in London. Okay. And we have that happening right there. That's what's happening. We can anticipate that. Is it always picture perfect? Is it always good? No, so you're going to be wrong sometimes, and that's fine. That's a part of trading. You got to accept that. Again, that's for a different topic, a different day on psychology, but we're talking about liquidity here. And on the typical day, more times than not, and you see something like this where it's in a deep premium and it's taking out this liquidity like this, and it's expensive, it's going to want to expand lower now. So of course, it's not going to respect agent session, or it's not going to respect this area, even with it already taken out agent session lows already. It has sufficient buy side. It has previous day's highs. It has agent session highs. It has more resistance than support, and it's inexpensive. So of course, it's going to expand lower to that next level now, to that next level down below. Okay. So yeah, we got that 4 hour imbalance, and again, we have a discount right here. We also have this 1 hour right here, which is an inefficiency, of course, right there. See that? And that's what you get. Look, right here, look. It expands lower. See that? It expands lower and it draws down into that imbalance right there. Okay? So we took out that high, being agent session highs, previous day's highs. That's liquidity. And because it was already in a premium marketplace, because this happened in London session, a key time where we can anticipate manipulation, aka Judas swings, are going to occur. It's in a premium. It's got sufficient liquidity. It has no reason to move higher now. So then it moves lower. Yes, I understand it took out agent session lows. And that agent session lows right after midnight, it gave it sufficient liquidity to make the trip up into this high because it's such a very strong magnet. That's what we've already talked about. But now it has no reason to really respect that because it's already taken out these highs. Okay. And it's already in a premium marketplace. So now it's going to have that next leg lower. And that's where you get an expansion like this. Because now it has that expansion lower. Now, again, is price typically a straight line lower? Is it typically that easy where it's just, okay, the highs put in now, it's just going to sell off down to a discount, just super clean one move like that? No, it's going to gyrate from liquidity to liquidity. Okay. So then we have this move lower. What's it want to seek on this move lower now that it's already taken out the sufficient buy side? It's going to want to seek that internal range liquidity. It's still not in a discount on the higher time frame chart, so we still have that expansion that's happening, but it comes down here and it seeks that 1 hour internal range liquidity right here. And then we also have, let me see. Let me make sure. No, that was another level. I was looking at something else, but yeah, guys, but that was the deal. Because if you go to this 1 hour chart, look, that's an inefficiency. That's a 1 hour inside that 4 hour imbalance. That's internal range liquidity. That's liquidity that it's seeking right there. Takes external, seeks internal on this expansion lower. And again, we have the high put in right here. That's the manipulation move. Remember, wicks do the damage. The body tells a story. There's your wick on the daily range. Taking out this high in a premium marketplace. It has sufficient buy side liquidity. So now it wants to seek the internal range liquidity below because it's too expensive. It has no reason to move higher because it's already expensive and it has sufficient buy side liquidity. So it seeks this internal range liquidity on the 1 hour chart. Now that you've taken this liquidity, right, you're coming down and you've rebalanced, not a lot of it, but still you rebalanced a portion of that price action right there. It now is going to have what? It's going to have some fuel. Think of it like that. It's going to have some fuel to move higher. Okay. And then we go to this, and you can, if you study this and you see, well, actually, I think it was on the 15-minute chart. Look, on this push lower now, you created these inefficiencies on this push lower because this was a very strong push lower. And on this push lower, it created what? It created imbalance to the downside. Look, right here. you have a 15-minute bearish imbalance right there, and you have a few levels up above as well, as you can see. So we had this expansion lower, which created these inefficiencies. Now, don't forget, what did it just recently do? It came down into a 1-hour imbalance, but it also took out, of course, external range liquidity in the process. Because when you got this push low right here, look, it's taking out these lows right here. That's external range liquidity. It's taking out, look right here. See the swing low right here where my cursor is from New York on Wednesday? That's external range liquidity right there, because it's an old low. We've already talked about this at the very beginning. Old lows, old highs, external range liquidity. So it's also taking out external range liquidity in the process, and it's also come down to this imbalance in the process. So guess what? It's going to want to gyrate. It's going to want to do its thing, okay? So again, it's not like a straight line lower. It's not just all the way down to a discount, one swoop. No, it's going to gyrate. It's going to work. That's what price does. It's going to pull back. It's going to do its thing because it has this liquidity that it's working around. It takes this external. It comes down into that 1-hour internal range liquidity. So now it has some fuel to do what? To push it up inside this range. And that's where you can get some entries like in a premium marketplace, and you can trade continuations. That's where it happens. But in something like this, that's not enough liquidity for price to make the trip to come up into these highs up here though, okay? Because again, remember, it's in a premium, all right? It's in an expensive marketplace. It already has previous day's highs. It already has agent session high. It has so much buy side liquidity taken. It has no reason to make that trip back up into those highs. And again, it happens in early London. So that was our manipulation. That was our Judas swing higher. That was, again, it goes back to the wicks do the damage, the body tells a story. That you're anticipating essentially that that is going to be the wick of that daily range, of that daily expansion, okay? You're anticipating that that's going to be that wick that you see on these daily candles. You're anticipating it right there because it's taking sufficient liquidity. And then boom, it comes down, it expands lower, it takes out external, it taps down to that 1-hour internal range liquidity. And it has a necessary fuel to make the trip up into this new internal range liquidity that it creates up above. Again, it takes that liquidity, like ping pong back and forth. It takes that liquidity. It seeks the next liquidity up above. That's what you see right here. And I don't think it did pull back into a premium, though. I might be mistaken. Let me take a Fibonacci from that to that low. It did, just like that. And it goes back to what I was saying a second ago. That's where you'll get a lot of these retracement opportunities, or sometimes your optimal trade entry opportunities when you have something like this. But the thing is, and this is where people go wrong, is they don't have a full understanding of price. Like this is, I'm giving you a full understanding of price. Like you got to consider these things. You got to understand where you are in the grand scheme of things. You got to understand where you are in the daily range. So you can see right here, we came up into a premium marketplace. We came up above 50% equilibrium, and we found resistance there. But I understand, okay, I see this push up, and I talked about this. I posted this in chat for a little scalp opportunity, but I figured it wasn't going to exceed this premium marketplace because I understand it's overall bearish. Okay. So we had this thing, it pushed up. And we also had some news right here as well. And we had that first push up from news, which is another bearish signature. A lot of times the first push from news is a fake run. So actually what I had was right here, I had some news in London that pushed us up to rebalance this price action. That was just like that final nail in the coffin. I figured, okay, yep, it definitely likely wants to move lower now because now it has this imbalance efficiently delivered. It has sufficient liquidity to now make the next trip lower. You know, that's what price does. It just gyrates from liquidity to liquidity. That's what it does. So this push lower, it took liquidity right here. So now it has the necessary liquidity to make the trip up into a short-term premium now to rebalance this inefficiency right here. And then after it pushes up into a premium, after it rebalances that price action, where do you think it's going to go next? Because now it's moved up into what's considered an expensive marketplace on that 15-minute range. Okay, and don't forget, it's still, look right here. You see this horizontal green line right here that I noted earlier? That indicates where we would enter a 4-hour discount. So it's still in a premium in the higher time frame too. It's still an expensive marketplace. So now we have this 15-minute, which has moved up into an expensive marketplace as well. It has that chance to breathe. Think of it like that. Price has had that chance to breathe. It's moved up. It's rebalanced its price action. And now it has the necessary liquidity because it rebalanced its internal range liquidity. It moved up into an expensive marketplace. It has an 80 institutional price level. It has the necessary resistance, the necessary liquidity to make that next trip lower. And it does it down into a discount marketplace. And you can see this thing just, it went ballistic and had that big expansion lower right there, as you can see. And it just, that was the case. Is it always that clean? No, it's not always that clean, but that's just a really, like that's the typical bearish expansion day. That's what price does. It'll put the high in London, and that high that is put in London, again, it's going to do that after it takes what? after it takes liquidity. And I've taught you, key liquidity pools to look out for that you're going to base that trade off of. It took out previous day's highs. It took out Asian session highs on that push up into London session. You can, and then you see the proper thing. You understand where it is, whether it's in a discount or premium. You understand the market structure. Then you can anticipate that is going to be the high that is put in today. Okay. And then you understand that, and you see this push lower right here. It pushes lower, takes out some liquidity. It gives it the necessary fuel it needs to come into a premium. But you understand, because of where you are in the grand scheme of things in the higher time frame chart, you understand that it's still in a premium. You understand that this is probably going to get clobbered. There's your retracement opportunity. And then it sells off, and it comes down to a discount, and attacks, it sells out below, right? And that's what we saw. That's what we saw take place on GBP USD. And for a bullish opportunity, it's literally like this, but reverse. Okay. Again, is it always this clean? Is it always this big of a expansion? No, but it's the same signatures. Like what I just told you here, it's the same exact signatures. It's not always that big of a move, but it's not always that clean of a move. And sometimes it'll still, of course, it's trading. Sometimes you'll still get stopped. Sometimes you'll still get it wrong. That's part of it. You got to accept it. But that's how price operates. Like that's everything price does. It revolves around liquidity. And again, I use liquidity, I use market structure, and I use time. And I kind of briefly went over all of it in this, just with that one example. I went over the market structure. I went over the liquidity that it took. And then, of course, we utilize the time aspect, which is, again, London session. We understand London session. Okay, that's a key time where that manipulation is going to occur. That's time. That's how I implement time. Because then I understand, okay, the high is going to be put in London probably. And I have this liquidity right here that's taken in London. So it's going to expand lower into a cheap marketplace now, because it has no reason to return to this high now, since it already has sufficient liquidity in an expensive marketplace. It all connects together. You got to have that firm understanding of liquidity. You got to have a firm understanding of market structure. You got to understand when price is going to do what it's going to do, all that stuff. And it all connects, and it brings one big picture. Okay. And that's why price does what it does. And it's the same signatures day in, day out, week in, week out, month in, month out, same signatures. Price is price. That's how it operates. Okay. And again, a bullish scenario is just that, but the opposite. All right, so I think that about wraps up this video, though. Hopefully you enjoyed, you got a immense value out of it, and I'll catch you later.